Hello, everyone. I'm Keith Brewer. I'm one of the founders of B2 Insurance, my brother Derek. Yeah, like Joanne said, we've been in insurance for over 25 years. Probably haven't seen insurance market like this since starting in the business. And, I'd like just to start by why are we in this situation? Why is this happening in insurance? The original start was COVID-19. The carriers started losing money after COVID-19. People weren't working. Department of Insurance wanted to protect the consumers. Insurance carriers couldn't raise their rates. Well, not only did everyone start going back to work, getting in more accidents, all of a sudden people's homes got older and they're having a lot more water losses because pipe issues. Then we had the Agora Hills fires, and we had Malibu fires, and State Farm and other carriers lost billions of dollars in those fires. And now here we come to today, and we had the Eaton fires and the Palisade fires, and there's another $10 billion gone, or more than $10 billion, and property losses. So hence, the insurance carriers are risk adverse. They're scared. They want to protect, or at least not even protect, just try to make a profit at this point. Unfortunately, they could only ask for a rate increase every quarter or so, and the rate increase is capped. So when carriers need 30% rate increases, 50% rate increases just to try to be profitable, they're getting 9%, 12%. So it's not enough. That's why you see carriers like State Farm, Allstate not writing in California right now until they could get their rates to a level where they're happy with it, where they can make a profit. That being said, we still, as brokers, are able to navigate this market and find carriers that are coming into the market. So we do have about 10 or so new carriers that have hopped into the market that are writing business that we are appointed with. So we can get you coverage, your clients coverage, without having to go to the California Fair Plan. And the California Fair Plan, speaking about that, is super overwhelmed. They're getting thousands and thousands of submissions a day to quote new homes. And they're super backed up. They have huge lag times. And it's a little tough to work with California Fair Plan right now, but they are writing business. So if worse comes to worse, you have a house in Palos Verdes and none of our carriers want to write it, we can always go to the California Fair Plan.
Keith, could you just give a quick description what the FAIR plan is for somebody that might not know?
Yeah, so the Fair Plan is a state-run insurance company. And if you can't get insurance on the open market with admitted carrier, State Farm, Mercury, Travelers, and none of them will write you, then you can always go to the California Fair Plan, which is only fire. There's no water, there's no liability. So we do have carriers, which is called the difference in conditions, a wrap policy that will wrap around the Fair Plan and give you some water damage and give you theft for your property, and a liability as well, which you need. Everyone needs a liability policy on their home. Yeah, so, and the California Fair Plan is also backed by the insurance carriers that are writing in California. So if the California Fair Plan is losing all that money too in the Palisades due to these fires, they can assess each of the insurance carriers that are writing in California as well for a portion of their losses, which is going to come down to the consumer, us, with our own homes. Everyone's insurance, unfortunately, is not going backwards. We're going to see rate increases, not only this year, but this is going to be for a few years. So to make sure that these insurance companies can be profitable. So now when a home buyer is coming to buy a new home, they have to assess all these costs, right? No longer are you getting home insurance for $100 a month. I mean, maybe not even $200 a month. You're looking at $300 or $400 a month for homeowners insurance. So these new buyers have to recognize that. And speaking about home insurance as well, and insurance carriers being risk adverse, I'm going on tangents right now, but this is important to know that the insurance carriers, all insurance carriers want pride of ownership. Okay, so there's four major things that have to be updated in the last 25 years. The roof has to be updated in the last 25 years. Plumbing has to be updated. Galvanized plumbing is not great. Do we have carriers that will write galvanized? Yes, but the carriers want to see those updated. And the other biggest thing is electrical panels. Carriers are no longer taking Federal Pacific Stablock, Zinsco, Challenger, Sylvania electrical panels. So if any of these homes have these older panels, they need to be updated. That's another cost. So when people are buying new homes, they have to realize that either the current homeowner at the inspection is going to have to make these updates, or at some point, the new homeowner is going to have to make these updates themselves, which is going to be a high cost, and which people need to know to get insurance, what they're going to have to do to their homes. Yes, if you want the rates, like a normal home, I'd say, I don't know, say 1,500 square foot home, and we're looking at $600 a foot. So what is that, 800,000 to replace a home of that size on insurance is going to cost anywhere from 2,500 to 3,500 in premium for the year. Okay, that's if all the updates have been made. If the updates have not been made, then you're looking at probably double or triple that, $6,000 to $10,000 to insure, or you go with the California Fair Plan and don't get a great policy, get a wrap policy on it, and still ends up being about $6,000 or $8,000. So you got to weigh out the costs, make all the updates and get a lower insurance premium, or don't and have a higher insurance premium. But at some point, all the carriers are going to want these updates made. Derek, am I missing anything? Want to add in there on any of that?
Yeah, you pretty much covered it all. And like he said, at some point you could put a Band-Aid on it, but you're gonna have to rip that Band-Aid off and do all the updates. So yeah, we are recommending, and it's costly. You know, roofs are 30 grand, plumbing is another 30 grand. The electrical, I mean, it could be 120 grand just to remodel all, if you want to do all four. So it can be pricey, but again, the insurance companies, to protect them, they're going to want, and they're not even going to sell unless you've done a full remodel.
Should we go to questions, Joanne, or? Joanne, can you hear us?
Sorry. I'm sorry, guys. I'm sorry. Yeah, does anybody have any questions in the meantime? You feel free to unmute. I don't see anything in the chat, but well, I'm going to ask a quick question. So, have you said that they're not ready to come back, but do you think State Farm and Allstate will come back in writing fire insurance?
The only way they'll come back is if the Department of Insurance allows them a really hefty increase in rates. We're talking 75%. They asked for 22% and they got denied. And that's just on the current book. But also, if they do come back into the state, the Department of Insurance is going to make sure that they insure portions of those fire areas. California Fair Plan, that's the state. Like, they don't have a ton of money to be giving insurance to everybody out there. So the purpose of the Fair Plan is really last resort. You're right in there, you know, right in the fire zones, but they want these carriers to take the outskirts of the fire areas. All that Palisade stuff, it shouldn't have been Fair Plan. They probably want, you know, Mercury's and State Farms to be taking that. So for them to come back in, they're going to have to. But Mercury never left, which is good. So they're not going to have to battle to come back into the state. They're just going to have to battle to get increased rates.
Well, back when I was with State Farm for 27 years, people would buy a house and they would call you that day and say, "Oh, could you bind coverage?" And they would. Now I know that's not the case at all. What's the turnaround time when somebody calls and applies for homeowners insurance?
I would give it if it's a high-end home, we need 2 weeks, 2 to 3 weeks, right? Because we're going out to our surplus lines carriers, our high-end carriers, and there's a company called Vault, but they take 2 weeks. They're doing underwriting on the inside. They're doing aerial photos, AI, to see if there's been any permits before they'll write the policy or give a policy. So yeah, I would be 2 weeks. But if it's a clean house that's been completely remodeled, most likely we're getting a quote in a day, no problem.
Yeah.
But when you say high end, do you mean 2 million and over, 3 million and over, a million? where are you number
I'm,
one?
on the replacement cost, I'm saying 3 million and over on the replacement cost. So that's like a $5 to $7 million home.
But yeah, let me clarify though, on your regular homes, we have access at our fingertips to quote 10 different carriers. So we put the address in, we go through a few screens, put some general information in, and either we get a red sign says don't go any further, or we get a green sign. And these insurance carriers are using AI and Google Maps to take aerial footages of the roofs to see if there's any water damage, stains, etc. They're also pulling permits and seeing if the plumbing's been updated, when the last time the roof's been plumbing. So they're using AI to do this. So we could just type in the address and just get a red sign, say, hey, stop, don't go any further. We don't like this risk. So we'll know if we could go to our admitted carriers within the first day of quoting. After that, if they decline, then we have to go surplus lines, Lloyd's of London, Lexington, these types of carriers.
And what's the best company right now? Like that, the well-known company that will insure homeowners here in California or Southern Cal?
So we have two that we go to right off the bat that are admitted carriers. It's Mercury and Bamboo Insurance. Those are the two top ones writing right now. But I mean, we have Delos and we have
Lightspeed is a good one. It's a Lloyd's of London product.
what I'd say our top two are Bamboo and Mercury.
Okay, can I have one question? This is Stephen Hall with Keller Williams Power Strategies. Yeah, majority of the houses in Power Strategy are more than 25 years old. So when we put a deal in escrow, we only have like 30 days or the 45 days to close and 17 days to remove the insurance contingency. So are you saying that we need to have the updated now or the committee to update it in the future before we can get the insurance to close escrow?
So we have carriers that we could close escrow with, and without updates, but those premiums, instead of the $2,000 to $3,000 annual premiums, now you're looking at like $5,000 instead of the $2,000 to $3,000. So yes, we could get it done in a timely manner, but if there's no updates in 25 years, those premiums are going to be higher.
Keith, what if they update like after they move in, a month or 2 months down the line?
We have to change a policy. So we have to start with one of those high-end carriers and then change the policy. So cancel the old one, start a new one.
So it's likely they could get a normal policy for 2 or 3 or 4 grand once they do the updates.
Mm-hmm.
Hey, Joanne, Alan Bond, how you doing?
Hey, how are you?
Good. So I got two quick questions. And along the same line, are the companies going out and actually doing physical inspections of the properties? I know that was taking place with, I think, like USAA and some of those in the past, or they switched totally to just electronic and AI now at this point.
They're still going out, and unfortunately, the inspections happen after the business has been closed. So then they can flat cancel you after inspection. Mercury gives you the choice. You can do a phone with your own phone and walk around the house, or you can have them come out and do an inspection. But they're giving that option so that it's not so obtrusive to the client. And but yeah, you can have either or.
Got it. And then a second question, totally different topic really, is if you have a State Farm or Allstate in one of these company policies currently, I know that they canceled quite a few. I mean, what's the risk that they're not going to renew the policy at this point? Any idea?
Well, if you're in a fire zone, that they've been mandated that they can't. So you got to be in a surrounding within the mile of the Palisades or Altadena. But if you're in Hermosa, Manhattan Beach, they absolutely can non-renew. They have to give you at least, I think it's 60 days to allow you to let you know about it. But most of them are giving you like 3 to 4 months, letting you know that you can non-renew.
And again, I don't know, but isn't most of Palos Verdes in a fire zone?
Yeah, they're not quite as known as a fire zone as Pacific Palisades, so it's not as much known as a fire zone. I mean, it is, but not as much as the other areas.
Okay, all right. Thanks for the info.
Thanks, Alan.
Yeah, one more question here. Since the Palisade fire in the last 2 or 3 months, have you guys been able to write any homeowner insurance policy for property in Palos Verdes?
Yeah. Yeah. We had carriers riding up there. I mean, we just had a client with a home that had a $2 million replacement cost on their building. So it was a larger home. I think it was around 5,000 square feet or even, yeah, around 5,000 square feet, but the premium was $60,000. So,
Was
yeah,
that because it was an older home and it hadn't been updated?
no, it was just because the replacement cost was over $2 million.
And that's to clarify,
So
not the
we're
sale
not
price.
talking, so we are not
Sorry.
talking about 5 or 10,000. We are talking about 40, 50,000 annual premium right now for
Yeah.
the average property in Prosperity nowadays. Is that correct?
Yeah, unless it's I mean, if it's a smaller home, that's like, 2,000 square feet, then you could still find, we still have carriers riding up there like Lightspeed. And some carriers that if the replacement cost for just a dwelling is under 1.5 million, they'll still ride up there. And worst comes to worst, you have the California Fair Plan, but it's not going to be $60,000. The California Fair Plan on personal homes, they're averaging $4,000 to $5,000. You get a wrap policy for another 1,000. So yeah, I mean, you could get $5,000 to $6,000 worst case with California Fair Plan.
And remember, replacement cost is not the sale price. It's much lower. It's much lower than the sale price.
Yeah, the replacement cost to rebuild the structure. It doesn't have any land value. It's just to rebuild the structure itself. Also, another question that we've had in our meetings is does a loss at a previous address follow you if you go buy a new property? And it absolutely follows you. So if you had 2 water losses at your previous home and you're going to buy a house in Palos Verdes, those 2 losses are going to follow you, and it's going to make it harder for you to get insurance. Now, vice versa, if that home that you're trying to buy had a water loss or a fire loss, some carriers look at that and some carriers don't. So we just have to find out. Some carriers say, hey, they weren't living there. It's not their fault that there was a loss there. But we are seeing some carriers look at it, and losses, it's like you're driving a car, it's like your MVR. There's something called a clue report for homes. And every carrier pulls a clue report. It's like an accident report, and they could see how many losses were on that home. And it goes into their algorithm if they want the property or not to insure it. But I'd say, again, 50% of carriers aren't looking at previous losses if you were not the owner there.
Hey guys, Jason Buck has a question. He has a large house of 8,300 square feet, could only get a fair plan, and it was 30 grand. This was a 3.5 to actually rebuild it, which is extremely low. Who should he call for a quote? Can he call you guys?
Yeah, so
Absolutely.
we have 2 carriers, Vault and KLM, that are writing these larger homes. But again, the premium's going to be 40 to 60,000, but you're going to get a full inclusive policy. You don't have to deal with a fair plan. You don't have to have a wrap policy. It's going to give you liability, water, and fire all in one policy. But yeah, you're going to have to pay the price for it. But yes, we do have carriers that will cover an 8,000 square foot home in Palos Verdes.
And most of these carriers are covering at a minimum of $700 a square foot, but going up to about $900 a square foot. So these higher end carriers are getting up there.
Guys, I have a question. I'm a mortgage broker, and right now the issue that I'm having with insurance is on condos with deferred maintenance, older roofs. I have one in particular that I'm going to send to you to see if you have any outlets for it. I mean, what do you recommend in that case? I mean, I'm just not having any luck finding insurance, period. And if I have special assessments already and there's a plan in place to get the roof corrected or whatever other deferred maintenance that's in play based on the reserve study, how are the insurance companies, are they looking to see that there's a plan to fix it in the next year to 2 years, or does it even matter?
That doesn't really matter. We have a carrier called KW Specialty. It's a Lloyd's of London syndicate, and they're writing 90% of the condos right now at a higher price. And there can be limited water damage on these policies, but it's a better policy than the California Fair Plan. But I'd say there's only about 3 carriers in California writing condos right now because of all the pinhole leaks, all the water losses. And I mean, the carriers are just trying to make a profit these days. So yeah, there's about 3 carriers writing condos. There's not a lot to choose from, but we have KW Specialty that, like I said, I haven't seen them decline 1 condo yet. So that's a good source. But they do have a 7-day underwriting. We type in the information, we'll get an indication for a quote that we could give you, but we do have to finish the application, refer it to underwriting, and have them approve it. But like I said, they've been approving almost everything.
Can
For
you
condo.
drop your email in the chat? I came in 5 minutes late, so I missed the contact info. Thank you.
Yeah.
I did see another question pop up on the screen asking, they heard that the California Fair Plan is bankrupt. They like we said earlier, are assessing all, and they have this in their bylaws that they can assess every carrier in California to come up with some of that money that they've lost. And so that's what they're doing. My opinion is they will be around, but they are going to tighten the screws.
Thank you.
Oh, you're welcome, Bill. Does anybody else have any questions? Now's a good time to ask. Don't be shy. You could either ask it, unmute, or you can put it in the chat.
Hey, Joanne, Alan again. Just, I guess
Alan.
I'll ask, and it's not fires, but what's happening back with the landslide area? Is there a certain area they're redlining to a certain extent, even though they can't redline, or the risk is too great, or what's the status over there, like on Barkentine or areas close?
So Mercury was riding in that surrounding area quite a bit. But they have also, either because of the fires or whatnot, are really not riding that area anymore as well. Most of that area is probably going to be Fair Plan.
Will you have a company that'll do the wrap up there? So
Yeah.
they get the liability and the theft?
Yeah, we do.
Anybody else? Now's the time. Well, you got these great guys right here. I know they're very busy, so if you have anything and you want to ask it, now's a great time to ask it. They both put their emails in there.
Okay, Stephen Hall again.
Yes, Stephen.
The
Thank you.
question is right now it seems that a lot of people are using California Fair Plan to cover the fire insurance. And what other company can cover the rest of it, like personal property and the liability insurance? Do you have a several choice that you can go to?
Yeah.
Go
So Lightspeed is a Lloyd's of London product.
Mhm.
And we have Bamboo. We have a company called Sage.
No, I think he's asking about the wrap, Derek.
Oh, the
Yeah,
wrap.
the round,
Oh, yeah,
difference
sorry,
of
sorry.
conditions or wraparound policy.
Yeah, so Aegis is doing a lot of wraparound policies. We just got an appointment with a new carrier, Summerview. They're doing wraps now as well. So yeah, there's not many carriers doing wraps, but there's Aegis is like the #1 doing all wraps. But we just got appointed with another carrier doing them as well. And so what is a wrap policy? So let me explain that a little bit. California Fair Plan only does fire. You can have certain line items for fire. So you can have the dwelling, you could get loss of use or business income if you need to go move somewhere else, or if it's a dwelling fire rental and you need income while that's being rebuilt. So building ordinance, you get those things through the California Fair Plan, but the California Fair Plan is only due to fire. You only get a recoup cost from the California Fair Plan for a fire. So a wrap plan covers everything else. Liability, slip and fall on your property, theft, water damage, and some wrap plans have limited water damage up to 100,000. Some will cover the full amount based off the dwelling limit. So that's a wrap. You get theft, you get water, and you get liability on the wrap. California Fair Plan covers fire only.
And when Keith says water damage, that does not include flood. Flood is a total separate entity, and you'd have to have a flood policy.
Yeah, so water damage, what we're talking about is a pipe leak or a toilet overflow. And now let me explain about pipe leaks. Pipe leaks have to be sudden and accidental. If there's a pipe leak behind the wall that's been leaking for 2 months, you get no coverage. So that leak has to be found within, I think it's a 7-day period. So it has to be sudden and accidental. If it's a slow leak, it's considered maintenance, and there is no coverage for that.
How do they prove that? The adjusters go out and
The adjusters go out if they see mold or they see super damaged drywall that could only been done in 2 months, not in a week, then you won't have coverage.
Okay, another question here, Stephen. Once we put the deal in escrow, and how long will it take for you guys to get the approval for the homeowner insurance? Because usually in the RPA form, we have 17 days to remove the insurance contingency. Is that a realistic date to remove the insurance contingency?
Yeah, like we said before, we have 10 carriers that we could get quotes from. Well, we try to get quotes from day one. If we can't get those quotes, then we have to go to surplus lines carriers or the California Fair Plan. California Fair Plans have been releasing quotes in about 2 to 3 days. So yeah, I think 7 days is enough. 7 to 10 days is enough to get quotes. But also, if you're using us or any other broker, we can get you a quote. We could type in and get you a quote. But what's more important is getting the full application done and through to the end where it's been referred to underwriting and you have a firm quote, not just a typed in, oh, the agent or the real estate agent just wants a quote real quick and we give you a $2,000 quote, but you better make sure that quote is approved and been through underwriting first. So that underwriting to have an approved quote can take a couple extra days. So, but yeah, so the point is, ask your insurance agent or whoever you work with, the day escrow opens, you should get quotes that same day. Ask for quotes.
Yeah. And we know you're already asking a ton of information from your clients and you're trying to make the process as simple as possible, but insurance, again, we have 12 different carriers, 12 to 20 different carriers. They all have their own questions. We have a pre-formatted questionnaire. It's best just to fill the whole thing out. Like we can email it to you guys, have them fill the whole thing out. That way we can shop every single carrier without having to come back to you guys and asking some additional information. So that's our advice.
And
hey guys, I'm sorry. Go ahead, Stephen or Keith.
Oh, I just saw this on the chat. If someone's out of town for 2 weeks, would there be water pipe coverage? And that's a great question. I mean, if you're out of town, I don't know, it might be covered. It might for 2 weeks. I mean, that'd be kind of an adjuster come out and see, but it's up to the insurance carrier on that one. That's a gray area.
But if someone's leaving out of town for 2 weeks, normally they're gonna have someone stop by, check the house, or hopefully people are turning off their water if they're gone for 2 weeks. But yeah, it would be something hopefully that was caught earlier than 2 weeks.
Hey guys, someone's asking if you'll repeat the 4 things that insurance needs to be updated. So the electrical, the plumbing, so
4 things. Start with the roof. That has to be updated within 25 years. Electrical, plumbing, and heating. So those are your 4 things. And the water heater has to be strapped as well. The unstrapped water heaters they don't like, but those are the 4 things. And if you want to throw a 5th thing in there, well, 2 more items actually. The paint has to be updated. The carriers are not accepting chipped paint, and they'll use Google images to see if the paint is up to date. They want to see pride of ownership. And one last thing, that is a huge thing, are major cracks in the driveway, trip and fall. They don't want to see any trip and fall. So if the driveways are got big undulations and huge cracks, they aren't going to accept that either. So really 6 things. And then there's another question. Can we email the homeowner questionnaire to Zoom participants? We have the questionnaire, Joanne. Can you send that out, or how do we send that out?
Why don't you send it to me
Okay.
and I'll make sure to distribute it. I'll get everybody's information from Rick.
Keith and Derek, I have another question. Are you able to, in advance of getting into escrow, like during the offer phase, if we know we're going to be close, to at least give us some guidance whether or not insurance is possible on a property? Do you have any tools like that?
Yeah. Yeah, I mean, we can type it in. Yeah, we have assistants here that if you're just looking for an address to see if it's going to fly with one of our top carriers, no problem, shoot it over. I mean, we do need a name and like a birth date to put it into the system. But yeah, if we have a name, birth date, and the address, we could type it in, and we could just assume that updates have been made in the last 25 years. And we could get you a quote that way, but then you'll have to, on the inspection, check to see if the updates have been made. But yeah, we could get you quotes so you have an idea of what it's going to be with some basic information.
I got a question. Going back to what you said on your claim is going to follow you from property to property. If you were in a property for 30 years and had a claim 10 years ago, is that ever dropped off or just going to hang with you forever?
Yeah, they drop off after 5 years. Some carriers are 3 years, but most are going back to 5 years.
Okay, great. Thank you. That seems more fair.
Yeah.
Perfect.
There's a question about the Portuguese Bend area. I believe. Oh, go ahead.
Yeah, we're saying most of the Portuguese Bend area, landslide area, are going California Fair Plan. Yeah. Which we can help with.
All right. We still got a couple more minutes. If anybody has anything to ask, please do. If not, I'm happy to send HOA earthquake insurance. Yeah, State Farm has been dropping those.
Yeah.
Go ahead, guys. Sorry.
No worries. Yeah, we have a lot of carriers out there. Again, HOA earthquake insurance is all surplus lines or non-standard market, so it's not going to come from your Travelers, your Mercuries. They'll come from Golden Bear and a variety of different carriers. But yes, there's a ton of carriers writing earthquake insurance.
It's expensive.
Yeah, I bought my house 15 years ago, and the first 10 years I had earthquake insurance, and then a couple years ago I dropped it. So, knock wood, because I'm very pro earthquake insurance because I worked, I was around in, what was it, 94, the big one, the Northridge quake. And I was on the west side, and the people that did not have coverage, oof, it was ugly. So I was so pro, but because of the price, I let it go, and now I'm just gonna hope that we don't have something.
I think the South Bay's been pretty protected as far as being on a fault line. In Santa Monica, those areas, Northridge are closer to the fault lines, but the South Bay's been, I don't think I've seen too many homes been damaged by these earthquakes. Yeah.
Well, hopefully that stays the way it is. I'm hoping. Anybody else? Well, if there's no other questions, you have the guys' information. Feel free to reach out to them. They're very responsive. Like I said, I've known these guys 25 years, and they're wonderful to work with. Very professional. They're just fantastic. Oh, please the contact info is there. If you scroll up. Oh, there you go. Thanks, Rick. Thank you, guys. Thanks, Keith and Derek. Thank you, everybody,
you.
for taking
Thanks,
part.
everyone.
Appreciate it. And I hope you have a great day. Stay safe.
Thank
All right.
you.
Bye, everyone.
Bye.